Life is easy.
Hello everyone, a very warm welcome to our special panel discussion, Passively Active, the Smart Beta Factor Investing powered by Mirae Asset Mutual Fund. Passively active sounds like a paradox or a contronym, doesn't it? So I'm very curious to understand what this term means. Now, for all of you following global investment trends, you might already know this. Investors across the world are moving towards putting their money into passive funds. In India as well, large cap fund managers are finding it increasingly difficult to beat their benchmark indices. So it's natural that investors are finding index-style investing quite compelling to replicate market returns rather than beating them. For mutual fund investors, there are several effective strategies to target certain risk and return profiles, and smart beta funds are one of them. They have become more popular over the last few years. Now, smart beta funds essentially aim to bridge the gap between active and passive funds by using a rule-based investing strategy that combines the principles of both. So not a paradox or a puzzle at all. In fact, recent trends suggest a growing interest in smart beta funds that focus on themes like value, quality, momentum, and dividend yield, to name a few. Let's get to the bottom of it all. What I want to understand more is, what are the nuances of this relatively new investment category and how does it deliver on its unique approach to portfolio construction? I'm your host, Manisha Natarajan. And it is my pleasure to introduce you to a panel of experts who will help me decode this today. On my extreme left, Mr. Rajit Nagori, who is a seasoned financial professional known for his expertise in investment management and market analysis. Rajit currently heads the reputed Delhi-based multifamily office of the JK Group. My next guest is Mr. Saket Kumar. As a co-founder of ETF Junction, Saket has been at the forefront of the ETF revolution in India. Also with me is Mr. Umesh Kumar Della, Head of ETF Sales at Mirae Asset Investment Managers India Private Limited. Gentlemen, thank you very much for joining me for this very important discussion because it's a new term, smart beta funds. So Umesh, let me start by asking you the very basic question. How are they different from other exchange-traded funds or even index funds, which investors understand a bit better?
First of all, thanks Manisha and Mick for having me on the show. So actually when we talk about investing every time, so investing be in the active side also, fund manager always look for some specific styles, growth or say value or momentum chasing and all that. So these are the thoughts where investors generally, when they invest into any particular fund or with any particular fund manager, every fund manager we have seen typically has some style. Some fund manager is a value-based fund manager, somebody is on a growth-based fund manager focusing on growth. But the problem happens when you invested in a particular fund keeping growth, that this fund manager is a growth-focused fund manager or this particular fund. And we have seen lately that many times we have seen due to fund manager leaving the organization or fund manager portfolios being changed, or we have seen the fund deviating from the style, the growth style for that matter. Now the investor who has invested in that particular fund keeping growth as a focus, and that dilution start happening. That is where I think the smart beta comes into picture, where you can look for a product which is purely rule-based and a specific theme or a specific factor, and till the life of that product, that particular factor will be followed. Like in case of say, if you invest into say an alpha-based product, so that during the period of that particular product, a particular life of that particular product, the product will focus on alpha as a theme. That will be on the rule-based because the product has to replicate the underlying index, and index is bound to follow the rules.
So you're saying you're taking away the personality or the fund manager's investment style, risk which is there probably in other funds, right? एक बार आपने rule specify कर दिया, then you have to follow that rule. And I as an investor am very sure कि मुझे momentum stocks पसंद हैं. I want to take a slightly higher risk in, or I want to have a higher return even at the cost of slightly higher risk. So therefore I should invest in a momentum smart beta fund. Are you saying that?
Biases हर जगह होते हैं. फंड मैनेजर्स का भी समटाइम्स वी हैव सीन थोड़ा बायसनेस आ जाता है, स्टॉक स्पेसिफिक टू पर्टिकुलर स्टॉक, स्पेसिफिक टू सम पर्टिकुलर सेक्टर्स. द बायसनेस कैन बी पॉजिटिव आल्सो, कैन बी नेगेटिव आल्सो. बट एज एन इन्वेस्टर I would be more interested in knowing that whether the theme or whether the rule which I thought while investing is being followed or not.
Correct.
तो वहाँ पे मुझे लगता है स्मार्ट बीटा का एक अपर एज आ जाता है, जो कि नॉर्मली हम एक्टिवली मैनेज फंड्स में शायद उस लेवल पे नहीं आ पाता है.
Alright, that's a very interesting one. Rachit, how are investors? You're managing a large family office, and they have large pool of funds to invest in, and it goes into various products. So tell me, what is their understanding of smart beta funds? Is it something that you are looking at very actively now as managing this pool of money?
So actually, what is smart beta? Smart beta is something which is you are replicating the same index like Nifty 50, Nifty Sensex, or Nifty 200, but you're just putting a weight different, just to create a more alpha. And how that alpha is generating? By putting a rule by factor like what Umesh said, value, growth, momentum, low vol, etc. And I think it's a great product. It's a great evaluation of investing in a passive index with some mix of active strategy.
Very interesting. Saket, what has been the trend? I mean, is it getting accepted globally? Is it very well recognized and accepted by investors? Is it something that Indian investors are understanding?
Manisha, if you look at, first of all, is this product solving any problem? So if you look at, there are three parts to it. First, clearly, the large cap, largely has been underperforming the benchmark, right? That's something which is a problem for investor. Secondly, investors are looking forward to get something slightly better than, what they've been getting in the, traditional, ETF structure.
Right.
That obviously it provides. Third, if you look at the entire passive space, it's about processes than individual, right? Eventually, XYZ fund manager here and there or whatever. Now, this is where, these things. So, what has happened globally as well as domestically, investors are looking to get extra alpha, keeping transparency, cost effectiveness, intact. Now, that's where this comes. Now, let me give you some, the present texture of what the global market is all about. If you look at, I think it has been a historic, gain for the global ETF market. Right now, this is the 57th one. When I talk about February 29, end of February, it has been 57th consecutive inflow which has happened.
Wow.
Last month was $254 billion.
In just exchange traded funds.
Exactly. That's where the entire difference is coming in. If you look at, try a little bit to elaborate the point, it's because of that 57th, consecutive months inflows, right? It has touched a historic high of 12.30 trillion, the global size. Coming from almost 12,100 apps, roughly 12,063 ETF products. Very well diversified. Now that's where the global...
Over 12,000 ETF products globally.
Right. Listed 24,200 because, there are ETF which are listed in 2-3 markets. Now that's where. Look at other texture of that. Roughly 80 stock exchanges globally, right? From 63 countries. Issued by 735 manufactured globally. Now that is where it is, growing up crazily. Now coming to the next part, and where do we think globally? Now it was nothing great, but last 3-4 years has been a great shift. As of now, as we speak, more than 20% of that total corpus or the asset under management is in smart beta funds, 20.47. Traditional funds are slightly roughly around 80%. So that's where. So I just to sum it up first, it really gives an answer to the customer who is looking forward to something to get better return with cost effectiveness and transparency in mind.
So Umesh, I'm going to come back to you. The promise of active passive smart beta funds is that either I will go with a theme which reduces my volatility of the portfolio or it enhances my returns, right? Is that how they are structured? Give us a flavor of whether so far the funds have been able to meet either of these objectives.
Yeah, so basically उससे पहले समझते हैं कि smart beta, so whenever we talk about any passive product, it always you can launch any passive product, any ETF, anything, any smart beta ETF, provided you have or any index fund, provided you have an index to replicate.
Right.
So for that, the index manufacturer, like in case of India, it is NSE or BSE or S&P and all that. So what they do, they will first define the factor कि ये मेरा यूनिवर्स है, इसमें से मुझे ऐसा फैक्टर डालना है, and then keeping that factor in mind, they'll put a rule so that they can define or they can create a portfolio. So basically the idea is to create something which can basically outperform the existing plain vanilla index. So as you rightly mentioned, is it towards lowering the volatility? Yes, in some cases, because when you talk about factors, there are multiple factors used globally, but out of them few factors are primarily for to reduce the volatility. We have seen market have cycles, like we have seen sideways market, bull market, bear market, volatile market. So every cycle has a different structure, different theme to be worked for it. So it is something which is a call which investor should take, keeping his portfolio in mind, or he can consult an advisor if he has an advisor, that where the portfolio needs some kind of rebalancing, adjustment, whether the particular which sector or which particular factor is suitable for his or her portfolio. So nowadays these are the products which can complement your portfolio in such a way where you can make your portfolio much stronger. Be one at a cost level, because these products comes with a very lesser cost. Second, you create and you build your portfolio, enhance your portfolio strength on the basis of performance also. Because there are two ways. When I invest in the market, I always invest to beat the market. If I can't beat the market, let's meet the market. And meeting the market is something where you talk about the passive investing.
And something that you've said, Umesh, has stuck with me. कि आप अपना portfolio देखिए. Like for example, a lot of investors have taken higher bets with small and mid-cap funds, right? Rajit, what is your sense? I mean, you may be managing a family office, but you have very deep expertise in investments. Is this a product which is just for HNIs, high net worth investors, or do you think that this is a product that retail investors should also look at? उनको भी एक बार देखना चाहिए कि भाई कैसे काम करते हो ये, and should some of my money go into this product?
This, in my opinion, this product suits everybody. So, if anybody is invested in equity mutual fund as coming again from 3, 4, 5 years perspective, the cyclicity, the rebalancing, the way, how this weightage is going to be replicating on the smart beta. Every investor should at least understand what is the basis of that weightage, how that weightage is coming, what is the weightage given to the value or the momentum, and based on that they choose the variety of options available to any from any
AMCs. Understanding is important. Saket, what I'm hearing is कि भाई आप समझ लो momentum क्या है.
Correct.
If you're going for a smart beta fund which is momentum based, what is value, dividend reinvested, ये जो different themes है वो themes समझना बहुत important है, right? Am I correct in understanding that? Okay, so let me then ask you this question, that do you also, like for example for me as an investor मैं एक ही चीज देखती हूँ, rising market में has my fund performed a little bit better than the benchmark index, and falling market में, bear market में has it fallen a little less, because आप market के trend के against तो नहीं जा सकते.
Correct.
Smart beta fund maybe is bull and bear market to judge its performance. Is it the same parameter?
Correct. See, first of all, let me just say which are the 8. Generally, there are 8 factors which defines that entire space, right? These are largely momentum, value, right? Growth, quality.
I forgot to mention, that's a very important aspect.
Then the other 4 is liquidity, volatility, size, and dividend yield. Globally, if you look at dividend yield, has a huge portion. In India, what we are saying largely, because of the return driven, there are 3 factors which is really making a difference, right? Which is maybe I'll cover later. Just coming to a question. General perception, and what also I think couple of papers also covered, and it has been really seen in last 1 year because we are in the bull run. It has really been delivering good alpha, right? Vis-a-vis the traditional index fund. But let me share that not only in the black swan event what we saw in 2008, but also if you look at 2011, 2018, right, 15, right. So if you look at large cap, right, large cap is Nifty 100 index, right. So it corrected in 2008 roughly around 69%, right. And then 2011, 26%, and 2018, where the correction was not like a black swan event, it was minus 0.8%. Look at what has been delivered by the low vol. Low vol is basically
low volatility.
Yeah, exactly. Low volatility, right? There, vis-a-vis 2008, where it was 70%, the fall was 42%. Look at the difference. Yes, that's the difference. Look at 2011, when the Nifty 100 index, right, gave a return of minus 26%, it was minus 12%. Look at the third one, very important, where it was minus 8% in 2018, right? It was 10%, 9.8% plus. So it's not, so that's just one part. I spoke about large cap. Look at, small cap. This is the most volatile segment.
Absolutely.
Has it made a difference there? Look at two. One is Black Swan 2008 and the other one was 2018, right? If you look at in these two times, right, the small cap 250 index, right, which is the index for that small cap, right? They have almost corrected, right, with almost 50% and around 25%. Now here the fall was much lesser, right, to the tune of 26% and plus 10%. So this perception which people have been carrying and having is not correct, that it only the smart beta deliver better return only in the upward market or a bull run. Even in the bear run, it has been able to protect. Now, the key
your
question,
downside.
Yes, the key question is that maybe one particular factor may not be of much help, but multi-factor is at times not very consistently in one factor, but if you have multi-factor, it's quite consistent.
It's quite consistent. And over a 3 to 5 years, go ahead, Umesh.
Just mentioned, Saket, is that obviously we have seen the lower in the volatile markets, low volatility did well. In a bull market, we see momentum, or in
growth doing well.
We've seen alpha doing very well, growth doing well. We've seen equal weight kind of products are also doing well. But we always have to understand one thing, investor keep in mind, that every factor has a cyclicality, like the market has, right? So every investor should always keep in mind that which factor is suitable for what sort of market conditions. So there are two ways to it. Either you time it well.
वो तो कभी नहीं
हो सकता.
होता तो हम सब नौकरियां छोड़ के मार्केट ही टाइम कर रहे होते.
True, exactly.
All right. Give me a sense of, not just the global trends, but in India, the acceptance which is happening, and maybe Saket, you should take this question, of exchange traded funds as a whole,
correct,
index funds as a whole, and smart beta funds, because अब ये उसी का variation है, right?
Correct.
So how are Indian investors looking at it, और बढ़ रहा है, कितना बढ़ रहा है, किस rate पे?
So far, if you see, obviously the mutual fund have had a great run, right? From 2001, 1
yes.
lakh crore to
and I'm glad
52.75 lakh crore. Now, this is where the financialization, Manisha, we were just speaking about, right, is happening. That's something amazing. But if you look at, how has the entire space moved up? Today, we are talking about passive being 17% of the total portfolio, right? Now, that's amazing. Globally, it's 54%. The larger market.
So India, it's only 17%, right?
These are early days,
yeah,
right?
Early
it's
days.
The early adoption which is happening. And if you look at also, the retail has not yet participated in coming. That will make a huge difference. So that's where,
which is in a way a good, it's a validation that the fund managers have done well. The ones who are actively managing haven't done a bad job, right? But yeah, low cost becomes a very important aspect of why index funds and ETFs.
And just to add, India is a cost-conscious market. We have seen across, right? I think we believe as we progress, you will see a huge impetus in this. What we have seen globally also. Simplicity, convenience, low cost. I think these are something which makes things much better for everyone.
Much better.
Right? Just to answer your question next, right? 17% is the total passives, right? Of that, roughly, ETF controls 7.5 lakh crore, right? 8.5 is the total number. Look at smart beta. Now, this is very surprising and interesting to see what is happening at this space. If you look at as of February end, right, the total smart betas are 23 in number, roughly approximately 4,700 crore. Index put together 30 indexes, right, in that space, roughly around 12,000 crore, right? Look at what last 2 years, 32 new smart beta fund has come in. Last 1 year.
In last 1 year?
No, 2 years. 2 years, 32 has come.
Haan.
The collection in the last 1 year has been 6,000 crore.
Now, oh my God.
The big question, where is this money largely going? So roughly momentum, equal weighties, and third, low vol, right?
And low volatility.
So the largest, allocation, as you know, India is a return-oriented, we have been seeing historically people
we are
chase
going to
return.
become a $5 trillion economy. Is the growth? Everyone can sense and feel the growth, I think.
Evident.
But age makes a difference. Na?
Yeah.
If, for example, at this age of mine, I would not want to take very high bets with very
Correct.
volatile products,
Correct.
right, Rachit? So then, give me a sense of, age-related investment opportunities that people should look at when it comes to smart beta or risk profile. I mean, I guess age and risk go
age
together.
Plus risk profile plus tenure, time horizon of investments, that matters the most while building any portfolio. So, smart beta category is available almost in mid cap also, small cap also, and large cap also.
Acha, it's a cross. It's not
Yeah.
just large cap fund.
Yes.
Okay.
So if anybody wants to come in with that horizon to replicate the index, want to invest in index, they can certainly put some part money to the respective smart beta funds.
New investor. So here's my question. A little personal giveaway also of my age, but well, I do have a 21-year-old son who's going to step into work now, and he actually said that I'd like to start investing early because eco finance kiya to compounding उसे समझ आ गई है. So Umesh, I actually told him that look at an exchange traded fund, right? 2 years ago, I would have told him index fund because there was this concern that ETFs liquidity, do they offer the liquidity or not? How have things changed on that front in terms of liquidity of exchange traded funds and also smart beta funds, ETFs which are listed?
Thanks for highlighting, for asking this question. I think this is a very relevant and important question because we have been talking about ETFs a lot. काफी बातें हो रही हैं ETF पे, but the main concern is liquidity. If I frame it in other words, entry easy है, exit के time there's a challenge.
Correct.
Especially in case of ETF. That is where I think the regulator has also come in, and they have set some rules for market makers also, because in ETF globally also the market makers are the one who essentially who provides liquidity. Till the time there is an organic liquidity. When I say organic liquidity means बहुत सारे इन्वेस्टर्स ऑलरेडी हैं जो बाय सेल कर रहे हैं, बट उसके दौरान भी अगर वो नहीं भी है तो भी मार्केट मेकर का जॉब है टू प्रोवाइड दैट लिक्विडिटी टू द इन्वेस्टर सो दैट द बाइंग एंड सेलिंग कैन हैपन एट अ करेक्ट प्राइस. So when I say correct price means that there is a INAV which is indicative net asset value, and the price which investor is getting at the time of buying or selling, it should be nearer to the INAV. That's where the
but
job.
This has happened recently, Umesh, right?
So I think this.
When did this change happen?
No, the change. So probably the thing was earlier also the market makers were providing the liquidity, but there were few players. There were limited market makers also, and there were no certain regulations were not there.
Regulations.
So now the regulations are coming up on a frequent intervals where market makers are being asked questions. They are being maybe judged on the basis of their performance, day-to-day basis, how they are behaving on markets, how much percentage time they are available on the markets in terms of liquidity providing, pricing, what pricing they are providing. So these are the things where regulator is very keen to know. Right. So the liquidity part is, I think, slowly, gradually is being addressed. With coming time, I think it will be addressed more. I would maybe advise every investors to look at जब भी आप किसी ETF में invest करें, looking for a stronger market maker always gives more comfort. So always look for the market maker's profile also. How efficient the market maker is, how efficiently he has been providing the liquidity. So that's, I think, I must say that has been changed, slowly, gradually changing. Just want to add one more thing which you said, your 21-year-old son is entering. Trust me, this is the way which is changing since I'm coming from a manufacturer side. The product preferences are changing. जो प्रोडक्ट मेरे फादर को पसंद था या उनके लिए अच्छा प्रोडक्ट था, हो सकता है मेरे सन के लिए वो प्रोडक्ट doesn't make sense. He will go for something unique. He wants something curated out of that basic thing, and that's where I think smart beta also maybe can be one of the options where investor can always look for, okay, हो गया अभी निफ्टी 50 में मेरे को रिटर्न आ गया, इससे अच्छा इसी निफ्टी 50 में या इसी निफ्टी 100 200 में मैं क्या कर सकता हूँ. तो मैं निफ्टी 200 में अल्फा 30 अगर मैं ले आया इंडेक्स, तो आई एम क्रिएटिंग समथिंग वेयर आई एम चूजिंग 30 stocks which will be focusing towards alpha. Right. Maybe the new investor might like those kind of products. Absolutely. So preference is also changing, investors are changing, and obviously the liquidity part is, I think, is being addressed now.
And the younger investors clearly want an alpha. They definitely want their money to grow faster, and it should, right, for them. They have a long-term horizon, and growth should be.
The space itself is very dynamic in nature, Manisha. If you look at globally, it was largely, the traditional index. Then you saw smart beta. Now the active funds, last entire collection in, global market in active funds has been, exceeded in the first 2 months of 24. See what is happening, that people are looking forward, and the product is also trying to shape up the way the new innovations are coming in. And that's where, things are.
Do you believe that we could get in exchange traded funds, including smart beta funds, to a global level in the next 5 to 8 years? What?
It's quite difficult at this stage, but this is really answering some of the problems of the investor and making a huge impact.
Yeah.
And as you see, the collection I was just sharing, momentum, I think this is one thing which has been really doing well, has collected 2100 crore, right? Now look at the other one, which is equal weightage, 1700 crore. Now these numbers were, very, very insignificant. Low wall, 1100 crore. Now that is clearly giving that it would become a center of the portfolio as we progress.
Yeah. My God, you're an encyclopedia on numbers. One after the other, you're reading them off. Well, I think we've covered everything that I needed to understand. But final word from you, Rachit, in terms of investors wanting to look at smart beta funds, passive, active combination.
Yes, as the compounding part is, if you have low cost mutual funds, definitely you will make more compounding.
See, I think the low cost aspect is so critical, right?
So in a way, any investor must deploy some funds in smart beta and eventually increase this, understand the process. I think process part of is very much important. While choosing any AMCs, as an investor, I'm telling who are the AMCs, what is the process behind it, how they are rebalancing it, how they are generating better alpha than the peers. I think every investor should answer this question to the fund manager to understand what is the basis for it. And I think based on that, they can increase their allocation and invest in a better way.
Yep. Saket?
I would only say that, this is really solving a problem of the investor. As I think Rachit and Umesh said, the fund manager moves, right? And the new one comes, he's understanding. This is a process-based, right? And the problem with the active is that, the consistency, and there's no clear-cut differentiation there. Here, you want to chase growth. So there is an alternative, based on your character, what you believe should be part of your portfolio, which you have missed out on the other side of the portfolio. And that's where it is making a good impact. And I believe these are early days. As we progress, definitely it will gain further momentum.
I just want to sum it up by saying that when we say passive or a smart beta or any passive product, we are not saying that it is only passive. It will always be active plus passive. So for a client's portfolio, we firmly believe that it should be combination of active and passive, where you believe that active funds are not doing justice to their objectives. I think investor has a right to choose or maybe replace it with the better products. On the smart beta side, as Rachit rightly said, it's the art of actively investing into a passive fund through a passive route. I think smart betas also, there is an innovation happening. We are not restricting to one factor, which is a single factor. We are moving to multi-factors also. Now, like, to give an example, there is a product on a small cap 250 on, say, quality 100. So that's a one factor ETF or a product, and there is a product on small cap 250 momentum quality 100. So that one product has two factors. One factors work towards towards bull market, which is momentum. One is for quality.
Yeah.
So quality itself comes with a three more factors. So investors should be wisely choose these kind of products which is suitable for his or her risk profile, which is suitable for his or her existing portfolio, because these products are good in terms of cost, but always keep in mind it comes with a cyclicity. So always keep that cycle in mind, always keep the market in mind, and always come with a longer horizon. If you go
time horizon, very important.
You should know.
भाई आप ये मत सोचिए कि अगले एक साल में you have
not
to see. You
possible.
have to. Equities means irrespective
Yes.
3 to 5 years.
Yes. So I have to sum it up 3 pointers. One is investors should know which factor does what in what scenario. Investors should know what is the universe. किस यूनिवर्स से वो फैक्टर बन रहा है, एंड इन्वेस्टर शुड नो द मेथोडोलॉजी ऑफ दैट इंडेक्स विच इज easily available on NSE websites. You can go and check. Every index has a method, so the investor can choose and read that method and to understand better, and then obviously go for a large cap, mid or small cap, whatever kind of factor you want to go. Obviously large cap you are okay 3 years plus. For a mid and small cap you can go 5 year plus. For a small cap you should look for 7 year plus. That's how I would like to sum it up.
Well, fantastic conversation, gentlemen. First of all, this is my introduction personally to smart beta funds. And I've been a mutual fund investor for 25 years. So thank you very much, Rachit, Saket and Umesh, for speaking to me and the audience and the investors who will be watching this.
Thank you, Manisha.
Thank you, Manisha.
Thank you, Mint, for having
very
us.
engaging.
Thank you.
Thanks to all of you for joining us today. And before we sign off, I would like to thank Mirae Asset Mutual Fund for partnering with us for today's session. Until next time, stay well and take care with your money.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.